What's up, everyone? Free here. Just wanted to mention CS. It's been a long day. Sorry for the lack of energy. I did have to put my cat down today. But that aside, I still wanted to get this out there because there's a lot of you, you know, who you may have experienced a lot of losses. AMC people, whoever, Bed Bath and Beyond people who fail to see the warning signs. So CS guys, Credit Suisse, distressed bank, right? They claim that they don't really have as big a problem as everybody's making it out to be, and outflows is a problem, but they've been liquidity stress tested by multiple Swiss government agencies, and I don't think there's any reason the Swiss government should cover it up. Bailout or not, right? They don't really need to cover it up. They would just bail it out either way, right? So they said that they have like a 50%. Um, like not only did they beat the test, like say to pass the test with flying colors, it's 100%. They got like 150%. You know what I mean? So they're well ahead of the liquidity requirements uh, that they're obligated to need. So news came out today, though, or rumors, I should say, not news, that the company UBS, so UBS Group, might be looking to buy them, part or all of them. Okay, if it's all, that could be pretty substantial. If it's part, I don't really know how that works out. Either way, as you can see, it did pop into the after hours. There's a lot of bulls and a lot of bears on this particular ticker. The fact of the matter is, guys, this is down 90% in recent times, right? If you go back just to March of 2022, that's August, so March. We're looking at that's February, March, right? Let's try to get it right there. March 17th, it was 1356. March 17th, just 1 year ago, it was 1356. Okay, so 1356 divide $2. It's like 215, 216 right now, right? Divide 215. Let's go with that. Now, we'll go with close because this chart is based on close. It's not based on high. It's not based on low. It's based on close. So let's go 201. So it's down. Oh, sorry. I did that the wrong way. That's 600% more. But what I want is 201 divide 1381. Divide 1381. Yeah, so it's down, guys, 86% in 1 year, to be exact. If you ask me, that leaves more chance for an upside than a downside. If we take a look at a similar stock, we have SI, right? SI is it, they're filing, they're done, they're not looking for alternatives. And they filed like last week. They've maintained this 210 price for a company that's essentially shuttered. They're not even looking for buyers or nothing. This company's trying to stay afloat. They're trying to get the ship corrected, um, right? Other people are interested. The government's willing to help them. I don't really see a lot of downsides here, guys. I don't know what the bear thesis is, but when you're too big to fail, like Ford was too big to fail, it's still around. A lot of places were too big to fail. These guys aren't too big to fail. They're only 8 billion. There's other banks out there that are 50, $200 billion. Like they're not even like UBS. It's like 60 billion, and they're only 8, right? So it's not even like they're too big to fail. It's just like the government doesn't want them to fail, and other banks and whatnot are actually interested in them. So to me, that is saying it is a asset that has been basically attacked. Okay, short attacked, more or less, into oblivion. I see only upside there. It's already pumping. Okay. What does that mean for? Let's say it does go to BUYOUT, though. Okay, right. Let's get to the nitty gritty. What does that mean? What's the price? What is the price going to be less? Is it going to be more? Well, I would imagine based on the pumping, people think more, right? If you go and you look at the 52-week high, the 52-week high is $8.35. Now, I'm just going to go back to Twitter, okay? Let's compare it with Twitter. Twitter was not making money. Twitter is actually losing money. It's losing Elon a lot of money even still to this day. That was like, if dilution wasn't coming, who knows what that stock would be trading at right now. But it was down in the 30s. 30s. Okay, keep that in mind. The low 30s when the deal was announced. And it got bought for what, 53 bucks? So he paid well over and above. Now Twitter, that's a situation where Twitter like didn't have to sell, but like I said, if they didn't sell, where would they be now? 12 bucks? They'd probably be like Snapchat, right? They'd be pretty low. You know, most people don't pay for the blue check. I do, but a lot don't. So I really want to be able to edit my tweets. That's how bad I want to edit them. So, anyways, CS, let's go with that 52-week high. Twitter got bought out for 53, and the 52-week high was like 34 at the time. So it got bought out for an extra 55%, 56% over and above their 52-week high or their current trading levels. Anyways, current trading levels, let's call it. So if we just applied that same math to the current price, right, you're looking at $3.13. Like, again, we're talking 55%, right? Which is a pretty good return. And that could be as soon as Monday. That's why I'm trying to get this video out. I really don't want to or like care to even do videos right now for YouTube, but I do feel like obligated to try and help some people if possible and maybe put them in a better financial position. Still trying to grow the channel, but I might be moving a lot of content to Rumble too in the meantime. But anyways, 313. If we were to go based on the 52-week high though, okay, you're looking at 13 bucks a share, guys. Divide 201, that's 647%. So you're looking at $13 a share, potentially, okay? Now there is some information floating around that they were already loading. UBS was loading the boat with shares. That way they were getting them down here. They don't, if they already own, say, 10 or 20%, they only have to pay for 80%, right? They don't have to buy the whole thing if they already own some. I imagine there's certain limitations to how much you can actually buy, without, so like becoming a board member and then without having to get voting rights and voting and having people vote that it's okay for you to buy more and shit like that, right? So I loaded the boat in the after hours. I mean, I had all day to grab shares, but today, like I said, I was dealing with the cat all day. Same with yesterday. She was in a really bad spot. So, but humans can be selfish, and I made her live through another day that she probably didn't have to suffer through because I was too, cowardly to let her go. Or wishfully thinking, she's just sick and tomorrow maybe she'll have a better day, right? But yeah, so I didn't get any shares today on this stock. I actually had an order in that wound up selling when this spiked. I didn't even remember. I had a good till expired order in for 222, so I wound up actually selling some. But now I've since rebought. I got a slightly better price. I bought a whole whack load. My strategy for next week is going to see how the news plays out. Keep my eye on the options chain and possibly write covered calls if it doesn't look like it's panning out. Like if it looks to be just a rumor, at least for the week, because I had went live earlier this week and I had discussed this covered call. This is Charles Schwab, Credit Suisse covered call for today for $2. It paid 30 cents a share. So that means the break even was $1.70. Okay, it was a virtually risk free position to enter. um, made made 15% more than everybody else because it closed at 201 and I made 30 cents off of $2, right? So if the options are going to remain with a high volatility, a high IV, that's going to give you an opportunity even just write covered calls. And it might not sound like a lot, okay? 15% in a week, right? Everybody wants, hundreds of percent. You want to see the Microsoft calls. These were like 500% earlier. Nvidia was like 800%, I believe. So, like, obviously, it's not that price now because of zero DTE or whatever, right? Coin was hundreds of percent. I know that. Hundreds and hundreds of percent, right? There you go. 500%. Next week's probably huge too. You want to be seeing that, right? But in all honesty, maybe a little bit less risky investing, you can really grow your account, right? $10,000 times 15%. This is 1 week, 2 weeks, 3 weeks. 3 weeks, you're already up 50% on the whole account. 4 weeks, you're up 74%. 5 weeks, you doubled your whole account in a more safe manner. And then let's just see 1, 6, 7, 8, 8 weeks you've tripled. 9, 10 weeks you've quadrupled. You see it's going parabolic. So that's 10 weeks. 11 weeks you're almost 5x. 12 weeks you're 5x. 13 weeks you're 4x. 15 weeks, so now it's every week you're getting an extra x. 6x. 16 weeks, 8x. Now it's actually going even higher. 17, 18, 19, 20, 21, 22, 23, 24. So from 10K in half of a year, there's 52 weeks in a year. Oh, sorry, 26 weeks, 329G, right? I may have done an extra one in there. I don't know. My mind isn't totally right. But, 286, 329, whatever. So from 10G, finding plays like this that you can write a covered call on and just get 15% additional on your account. So the market is going to close in about 27 minutes. So I want to get this video out there, give you guys a chance to watch it, and then maybe make a decision and see if you want to get an entry here. If not, it's all good. Wait till Monday, see what happens in the world. As for that, you know, free.